All right, everybody. Welcome to another episode of the LOCKBOX, brought to you by the Grandin Group, Arizona's #1 brother and sister family team. Because now we have my son, Jaden, who's got his license, and he's out there working. And today we have a very special guest. It's been great because I've been wanting to bring him in. And I'll introduce him here in a second. But personal housing market, so you guys know, it is the end of February and we are swimming. It is hot, and it's a really good time out here and stuff. But so let's get started, because this is a good little issue that I've been wanting to talk about, and I've got a very special guest today, Court Crofoot from CrossCountry Mortgage.
What's happening, Jason?
Not much. How are you doing?
Oh, I'm better than I deserve. I just wanted to make sure that I understood you correctly, and make sure the audience knows that Jaden is not the result of the best brother and sister real estate team in Arizona.
That is exactly it. And people do, like, I get so irritated. They're like, "Hey, I talked to your wife." I'm like, "It's my sister."
I thought we'd have a little fun to start this.
No, we will. So, hey, Court and I have known each other years. But Court is, I would say, one of the top lenders in Arizona, and not because he can get a loan done. It's because, a little bit like me, he actually listens to what people want and then weeds through what they really want to get them what they need.
I'd like to think that that's the case for sure. I'm the anti-banker banker. I think that we can all look around today and see that the only demographic probably worse than a politician's a banker. So I'm not a big fan of them. That's why I do the job. I like to give people a little bit of different experience than what they're used to.
No, that's perfect. And so I'm really glad you could jump on this late notice. First of all, I got to give a shout out to FeedSpot. We are Arizona's #2 lifestyle and real estate podcast. So thank you for making that happen. Now, Court has no idea what we're talking about. So for those of you listening, you're going to be like, wait a second. But I know he's going to be interested in this. So I read an article this morning from actually one of the officials of the Arizona housing development out here in Arizona, and I didn't agree with it. So we're going to talk today about Arizona housing. And I think the problem isn't ownership. It's the narrative. And Court will jump in here in a second, but everyone's talking about housing being more attainable than headlines suggest, and how building and financing becomes a real obstacle. Housing affordability is a hot topic in Arizona, but are we getting it right? Many say Arizona lacks homes and prices are out of reach, but the reality is more kind of a nuance. So we're going to break down the real challenges here, why it's become difficult to get a house and finance them. Personally, my attitude is, owning instantrenters.com, if you're renting, you already own a home. You're either paying it for your landlord or you're paying it for yourself. So, Court, let's get into it. What is the problem with the Arizona housing and ownership?
Oh, what is the problem? Boy.
No problem.
You were right. I am going to love this conversation and this subject. Because here's the truth. And sometimes we don't like the truth. There's nothing wrong with it. Yes, prices are elevated from what they were. But guess what? Those elevated places, where we came from, that was elevated from our parents. And their 100%. Price from their parents. So interestingly that we're having this conversation this morning, because on the way here this morning, listening to KTAR radio, we actually have almost half of the city that can afford the average price now here in the valley. Okay, so, and that's just a median look. I think that that's very healthy for our market. And Jason, what I personally believe, and you and I have talked about this many times, it's not the American dream's dead, it's the American expectation has changed.
You're absolutely right. And this is kind of the hook I wanted to send off with you. Everyone says housing is unaffordable, But what if the real problem isn't ownership? It's the system.
I don't even know if it's the system. I think it's the expectation of what younger adults expect in their
Right.
first home. I actually did this recently. My first home that I bought 20 some years ago was less than half of the median price at that time. And I think that's a very, very important thing to talk about.
Right.
It was half the median price at the time. So, and I was on the way, way, way outskirts of the town. Now, the funny thing about that is that decision to own a home as opposed to rent, guys driving 35, 40 minutes to work.
Right.
I was in my early 20s. I had no children at that time. So it was a inconvenience to have to drive further than I wanted to, but the ability to own a home trumped my convenience needs.
Right. So we're talking about premium area versus growing communities. Keep explaining the trade-off between you want to live in Scottsdale, but it's unaffordable at 20 years old. So maybe you drive 30 minutes west.
Well, yeah, that was
and
the decision that I had to make. So,
Correct.
I did exactly that. My wife at the time, we evaluated the benefits of home ownership versus the inconvenience of a little bit further drive. And look, now looking 25 plus years later is the best decision we ever made. Why? Because you got to start somewhere in building equity.
Now, do you feel like you've grown? So by starting off in an area maybe you didn't want to be, and now you're in an area you want to be, there's something to be said about growing into that.
Of course. Well, yeah, I can't really think of what I may be like as a person, to be quite honest with you, if I had everything I wanted right out of the gate. I don't think that is a godly path, let alone a good path for our human consciousness. That's not to always have everything you want without working into it. It's unfamiliar for me. You know a lot about me. That's not
Right.
how I grew up, and truthfully, I think that's part of the problem too, because how I grew up is that the folks that did have the ability to help us like that sure weren't going to do that for us, because it wouldn't be good for us to be handed things.
And at the time, it's a hard lesson learned, but it ends up makes it great.
Yeah, I think it's look, and these kids get a bad rap, but let's be honest, they haven't had the easiest. They didn't grow up in the world I grew up in, that's for sure.
No, that's true. A lot of kids grow up, they don't want to leave their comfort zone here, and sometimes it's best that you end up having to drive an hour to work.
Well, I think a lot of it has to do with the parents.
I agree.
Yeah. It's okay that your kids fall down. It's okay that they want to leave the house. It's okay.
So basically the bottom line on this is housing is available, but it might not always be where you want it to be.
Yeah, I just did something here while we were sitting here chatting, and I'll share this with you in the audience. How many homes under 350,000 exist here in the Valley today?
Now, we're just talking Maricopa County, or are you on the...
Yeah, well, we're going to say Phoenix, just as a whole. So we're going to go up to, I think this would be fun just to see.
And then we want to explain, too, the other thing when you're talking to lenders...
There's 2,000 options in the greater Phoenix metro area. 2,000 options to choose from.
Under
350.
Now, I'm going to get emails on this. Yes, some of them have ridiculous HOA fees and so forth. But what court's saying is that options are there. It might not be the big 20-story mansion with a 20-car garage, maid service, and a brand new R8, but it's a start. And that's what we need to get to.
Yeah, I just, my first home was a townhome. As opposed to a condo, I lean towards the townhomes when possible, or patio homes, just because the financing's a little bit easier for that. But we've got down payment assistance programs. So, coming up with the down payment's not even an obstacle. So this idea that I keep hearing about, you can't buy a house, it's just simply not true. It may not be the waterfall 9-foot kitchen island. It may not have the gazebo, the pool, the spa, but there is something about owning your own home that changes everything about you.
No, you're absolutely right. So let me shift this conversation just a tad.
Please. Yep.
People call, and this is, and you hear it all the time because I send it to you. Financing is the real barrier. I can't do this. I can't do that. So we want to discuss mortgage challenges, self-employment, but I want to bring this into the mix. As you know, we've owned instantrenters.com for a long time, right? I get people that call and they're renting a house for $5,000, $6,000, $7,000 a month. They can't get a loan because, and I agree with it, there's a lot of hoops to jump through. What's your thoughts on if the government was to change, or the mortgage people were to change the way you can get a loan? If I've been paying $5,000 a month on my rent consistently for several years, why should I have to still jump through all these hoops to get a mortgage? Why can't there be some kind of streamlining for lending?
Sure, it's a good question, and it's a fair one, but I'm going to flip it back on you.
Okay.
Let's say it's your money, and you want to lend it out.
Right.
What are you going to ask of somebody?
Well, I think a regular person, if you got a track history, you and I work on track histories. Mm-hmm. If someone's got a good track history with a good job and they've been paying rent for this long, why should they have to hold? A lot of people cannot come up with $100,000 for a down payment.
Sure.
They're making, $5,000 a month, which means they're probably making about $15,000 a month if they're paying that in rent.
Sure. So on an individual like that, and here's where it really gets down to it. Right. We have a system right now that, as it currently sets, to get low down payment or down payment assistance, we have to go to a program that is going to allow for that, and those are going to be government-backed loans, whether through Fannie Mae, Freddie Mac, or Ginnie Mae. So in that specific instance where we have the 3% or 3.5% down options, there's not a lot of wiggle room in the event that the market did change. The lender could be put in a very precarious position by doing that. That option does exist out there, but we have to have government insurance on it. So this is where it gets a little bit tricky, because our tax code doesn't correlate with lending guidelines.
Right.
So there is opportunities through the tax code to take legal advantage of deductions that we then would not, as a lending institution, allow to be added back. So what you end up with is a situation where a customer is potentially using the tax code to their advantage legally, but then they try to buy a house, and those two things aren't talking to one another. Does that make sense? Meaning that the deductions that you took legally from the tax code over here, we can't then go back and say, hey, we weren't really telling you the truth. We want to add that income back.
No, that absolutely makes sense. So then we need to go to more of a...
So I think what you're getting at, Jason, and stop me if I'm wrong, is what we actually do at CrossCountry through our portfolio side, providing options. And what does that break down to? Quite simply, when it's our money versus the U.S. taxpayers' money, that's the difference.
No, exactly.
So we can do a 10% down payment for somebody that's self-employed, For
You could do a bank
example,
statement loan too, which a lot of people don't know about.
Exactly, a bank statement loan, profit and loss loan. Here's our thinking on that and why we require 10% down as the minimum. Our thinking is that if you are a successful business owner doing well, utilizing the tax code for those benefits, it should be creating an opportunity to save a little bit of that money for a down.
No,
Because we're not
absolutely.
paying taxes on it. So,
Absolutely.
and that's totally cool. We're totally good with that structure and that understanding. Now, if you're taking advantage of the tax code and you're broke, I'm going to question if it's a successful business or not, and we have to apply some sort of risk analysis to that.
No, absolutely. And so, here's kind of where it comes in, and this is where people get confused. You and I understand it, so we got to kind of lay it out for those that don't. I want to rent a house, let's just say $5,000 a month.
Mm-hmm.
I turn in an application, they run the credit. All right, you get a decent credit. Let's just say 680 credit score.
Sure.
You put down your first month's rent, $5,000, 1 month security deposit. So you're 10 grand into it, and you're renting a $5,000 a month house, and you're assuming you have 3 times the amount rent. Don't you think that maybe the government should make it a little easier, not for everybody, but for those people that are doing that, to be able to go into home ownership?
I do, but I think that I don't see that as a barrier to being a homeowner. What we're talking about really is coming down to proving income.
Right.
And that those days of net, of a stated income or no income loans, those didn't do anybody any good, and legally those loans can't be done today.
Right.
So we feel that we've created here at CrossCountry avenues for just about anybody. Look,
Yeah, you streamlined a lot for first-time buyers too.
Yeah, specifically for the first-time buyers, but we're going to have to utilize a government-sponsored, more than likely, program for that, which is going to require the proof of income. That the proof of income from traditional standards, pay stubs, tax returns, W-2s, that individual, we would not be doing them any favors to not do an analysis and make sure that we're setting them up for success long term. As you and I have discussed, what I am not is a debt salesperson. Our work begins the day we close because we got to get you out of the debt we put you into.
Absolutely. So the bottom line here is that the housing industry is really not the enemy.
Not in my opinion, no.
Right.
We are in a time in a point in history where outside factors have influenced the housing market, but the housing market and the system itself are not bad or broken. It's just we've just had to go through COVID. It was a weird time, man. And it's and we talked about it during it. I was confident that it was going to be a 10-year reset period after it, and I don't think I'm wrong.
No, I think you're actually probably right on it.
Right
So,
on the nose.
what is your takeaway on lending standards for reliable renters? Do you think we should reduce regulatory friction to make building faster and cheaper?
Yeah, and I think Arizona is actually leading the way with that, Jason. As of recent check, I know, what's it been, like 83 pages of the red tape stuff in the building process has been now removed already from our current legislation in power. So I think they're taking all of the right steps. That being said, what we can never do, and I always play the advocate of this, we can never sacrifice safety and quality just to put up a house.
Oh, 100%. And you know what? I'm afraid we're kind of seeing that a little bit with all these apartments going in. We're seeing some cheap building stuff going on right now.
Again, there's a cost to everything. It's not always financial.
Well, one thing I always tell everybody, and you and I do agree on this, is that we need to encourage accurate conversation about housing and avoid fear-based headlines. Markets crash and this and that, because honestly, it's not the case.
I think that can I will not only second that, but I think we could apply that across many topics these days.
Absolutely. Okay. So all of you listening out there, and listen, thank you for listening because, you have made the Grandin Group Arizona's #1 lifestyle and real estate podcast. The real housing problem isn't who owns the home. It's a system we've built around building and buying them. Fair statement?
I think that's a fair statement. Yes, if we're going to go down that rabbit hole, truthfully, a first lien position HELOC that's tied to your bank account, making the same payment of a 30-year fixed mortgage, we'd have everybody paid off in about 7 years. So, yeah, if we want to go to the true engineered structure of the loan and how there are better ways, but big money's in the way of that, and I don't see it changing anytime soon.
Well, hey, Court, so thanks for the last minute on this. Now, listen, I tell everybody, too, if you're considering buying a home, don't call me first. Call Court. We need to get you guys a roadmap to buy it. If you can't qualify right now, Court's and his team will put you on a roadmap to get a buy. Court, how can they reach out to you?
Sure. Thank you again for having me, Jason. It's always a pleasure to talk to you. You're the only guy I think I know that may have better hair than me.
I'm sitting there looking like...
We have a lot of fun, don't we?
Hey, also, Court, for those of you that... Court has a couple TV shows on the CW. If you get a chance, check them out. Yours truly's been on them a couple times.
Yeah, we have a good time, and it's a lot of fun. We just want to show our residents here and our guests that are coming in from out of town all of the cool lifestyles that our valley has to offer. It's a unique place in that regard.
Well, and you know what? This is one thing Court and I both do. He's obviously in mortgage, I'm in real estate, but very rarely do we ever talk about real estate or more. This is a rarity to have this conversation. Yeah. But we rarely talk about that. We talk about the lifestyle that's Arizona.
Yeah, think about it. It's truly what makes this entire state so unique. You've got everything from the, frozen tundra. If you go up north,
this year.
Not this year. Down to the, rolling sand dunes in Yuma and every topography in between. It's a really, really cool place. Here in the valley, living in Gilbert is going to be much, much different in lifestyle than, say, Anthem.
Absolutely. Every area, every community has a different personality.
Very much so. And I think that's really unique in a city of our size. I've been to all of our competing ones, and they're not like this.
No, it's not.
They're not.
It's different.
You don't have so many different recreationally centered areas that kind of encompass a lifestyle.
Well, today we're sitting on 83 degrees, and an hour north of here, you need a sweater.
I know.
Right?
Yeah. And 3 hours to the south, you can be on the beach.
That's exactly it.
Yeah, it's a cool place. It's what brought me out here from the Great Plains of Kansas.
Well, Court, how can people reach you?
Yeah, thank you, Jason. 602-882-5588 is my direct cell phone. I've been told I shouldn't give it out on these places, but you know what? Call me. We'll have a chat.
Hey, real quick, too. What's the difference between lenders? Every lender tells you, if I can't do it, nobody can. But why are you different?
I would say it's where we started. CrossCountry Mortgage has accomplished what I believe no other mortgage company's ever done. We don't have to close a loan this year to be profitable because our owner sacrificed his own wants and desires to build a really strong company for originators like me to have a platform of success. Meaning, we don't have to rely on PNC Bank to sell our loans to. Right. We have the ability. We service them, and this is a lot of information for the audience listening, but how the mortgage business works is actually pretty complicated. There's varying degrees and levels of lender, and we're at the very top of that food chain. Why? Because we have our own dollars. It's that simple.
No, absolutely. And Court does a fantastic job. So you guys make sure you reach out to him. little side note, because I've known him for a long time. When I met him, he was not wearing glasses.
No, age is catching up to me for sure.
It
I
is
can't see a thing without him these days.
Well, Court, thanks for joining the LOCKBOX presented by the Granite Group, my home
Jason.
brokerage. And we're going to see you on TV here, I think, in the next week or so. And thanks for jumping on at such a late notice.
Thanks for having me.
All right. Hey, we'll talk to you guys soon. We'll see you guys soon with the next episode of the LOCKBOX.
All right. Bye, Jason.